My name is Rachel Fetko, and this is my presentation on Pfizer, the pharmaceutical industry's financial giant. To start off on the history of Pfizer, they were founded in 1849 in Brooklyn, New York by cousins Charles Pfizer and Charles Earhart. They were propelled forward by the Civil War, which doubled revenues mainly because soldiers were wounded during the war and needed medicine to treat their wounds. In 1944, Pfizer became the world's largest producer of penicillin through a tedious process called deep tank fermentation, which required millions of dollars in investments as well as around-the-clock work to perfect. Attached is a picture of the process of deep tank fermentation, in which penicillin mold is taken and put into deep fermentation tanks with sugar and other ingredients in order to grow the penicillin. And then the penicillin product is separated from the mold, and that's what creates the penicillin antibiotic that we use. As a result of their success in the production of penicillin, Pfizer rapidly expanded globally. Um, as you can see on the map, many of their locations are in Eastern Europe and across the United States. And as of 2019, they currently export products to more than 55 countries worldwide. Their types of products include drugs, antibiotics, and vaccines. Their earliest, most successful product was the antibiotic penicillin, which was mainly responsible for weakening the cell wall and causing bacteria to die, allowing for recovery from a bacterial infection. The company also created many other drugs and medicines, such as Advil, which is commonly heard of, amoxicillin, and of course, the most recent Pfizer BioNTech COVID-19 vaccine. So to go a little bit in on that COVID vaccine, it actually has not been approved or licensed by the FDA, but it has been authorized for emergency use to prevent the coronavirus disease. And as a result of Pfizer's efforts to quickly create this vaccine, they were actually successful in becoming a world leader in producing and manufacturing the most efficient vaccine out of all of the pharmaceutical companies with a 95% efficiency. And there was also trials done that showed that the vaccine was 95% effective against COVID-19 hospitalizations among fully vaccinated adults and 64% effective among partially vaccinated adults. Pfizer has presented many opportunities for growth, with some of the most impactful being their improvements to research and development, as well as their expanding and emerging international markets. The company has a big opportunity for growth if they focus their research and development resources on high-value disease areas, such as oncology, pain, diabetes, and immunology. These specific high-value disease areas often represent areas of significant unmet medical need, high market growth potential, and areas where Pfizer may be first or best in class. I attached a picture that shows Pfizer's research and development spending between 2017 and 2020. And you can see that in 2019, in their fourth quarter, was when they had the highest research and development spending. I was kind of expecting 2020 to be higher in research spending, but it ended up that 2019, they actually spent a significant amount more than they did in 2020. So they also have a large opportunity for growth in terms of emerging markets in Latin America, Eastern Europe, and Asia. Pfizer claims that they plan to expand their operations into China by growing established products, launching new products, and reaching more patients so that they can capitalize in China and make more money off of that. Some threats and challenges that Pfizer faces include market risks, which includes in itself foreign exchange risks, interest risk, and equity price risk. So as far as foreign exchange risk is concerned, Pfizer has a significant portion of revenues and earnings exposed to changes in exchange rates. Apart from that, the interest-bearing investments and borrowings of Pfizer are subject to interest rate risk, depending on market conditions, which are, of course, um, frequently fluctuating. The final market risk occurs when the company holds equity securities and becomes subject to equity price risk, which can increase the volatility of their income in future periods because of the changes in the fair value of equity investments. So, of course, the investments of stockholders and shareholders affect their money in the end. Although all of these market risks pose a challenge for Pfizer, the expected adverse impact on the company's net income because of these risks is quite insignificant. It wouldn't detrimentally affect their company. Other minor challenges for the company include developmental setbacks, such as failures in clinical trials and adverse reactions to their medications. Um, these challenges exist for the company. They have had instances where they had to quit trials and quit the development of certain medications because they weren't successful in their trials. So that has been an obstacle for them, but it hasn't been anything that has adversely affected the company. Pfizer has executed a number of sustainability measures in order to remain ahead of their competitors. These sustainability measures include enhancing their operational practices through what they call strong corporate governance, which sustains them by promoting the long-term interests of shareholders. So basically, they maintain and enhance this corporate governance by consistently refining their policies and procedures to accommodate these shareholders and stockholders. Apart from enhancing their operational practices, Pfizer also strives to meet environmental health goals as a sustainability measure for their company. They claim that their environmental sustainability measures focus on three aspects: reducing carbon emissions, increasing water efficiency, and looking for innovative ways to minimize waste. So, I'm going to show a little bit about um, one of the ways that the pharmaceutical companies and their products can adversely affect the environment and, in the end, our drinking water, but more importantly, the water for our marine life. So it starts, of course, in the production, it becomes distributed. There's improper disposal of it. Not only that, but 70% of medications are excreted through urine and feces. So basically anybody who's taking medications is excreting them, and it's ending up back into the environment, going through sewage treatments. um, Even when they put them through the water filters, the particles still remain. So then it gets into the livestock and the poultry, and in the end it gets in our drinking water, but it also affects all of the animals in the process. So, what they're doing for their environmental sustainability, in 2012, they set a baseline goal to achieve by 2020. And this was to reduce greenhouse gas emissions by 20%, reduce the amount of waste disposed by 15%, and reduce water withdrawal by 5%. They successfully achieved this goal and actually exceeded it with a reduction in greenhouse gas emissions by 33%, the amount of waste disposed by 15%, and water withdrawal by 19%. I also here attached a picture that shows the frequency of detection in percentage of pharmaceutical pollutants in total river water samples. This was a sample of 30 rivers, and it shows, of course, high numbers of pharmaceuticals that were found in those rivers. So that was just something that I found interesting. A new goal that Pfizer set from a 2019 baseline, is to be achieved by 2030, is to become carbon neutral with a 46% absolute reduction in direct emissions. On to the financial performance of Pfizer, which can be determined by a financial analysis that looks at the financing, investing, and operating decisions that create net income. There are 5 key questions for analysis and corresponding ratios for each question. These 5 key ratios used to analyze and make business decisions are liquidity ratios, profitability ratios, solvency ratios, asset management ratios, and market analysis ratios. I attached a picture that just shows the importance of the ratio analysis, which helps in understanding the profitability of the company, an analysis of operational efficiency of the firms, liquidity of the firms. It helps in identifying the business risks of the firm, and so forth. So, starting with liquidity ratios, they are responsible for determining a company's ability to pay debt obligations. There are 3 main calculations that can determine liquidity, which are the net working capital, the current ratio, and the quick ratio. Here I have a table which shows each of those ratios, their formulas to calculate them, and then for 2020 and 2019's financial statements is the amount of money. So basically, this table just shows that in 2020, Pfizer had an increase in all 3 of their liquidity ratios, but most significantly in net working capital. The current ratio was a major improvement, with the table showing that in 2020, Pfizer had $1.35 of current assets to cover $1 of current liabilities, whereas in 2019, the company only had 88 cents of current assets to cover $1 of liabilities. Although the numbers for the quick ratio could be slightly better for their financial statements, it was an improvement from their previous year, which it was only 44 cents in 2019. So profitability ratios are the second kind of financial analysis ratios that help in business decision making, and they are key in understanding a company's ability to earn profits from sales or operations. They determine gross profit percentage and net income percentage, which I have included the formulas for, and also from the financial statements of Pfizer for 2019 and 2020. So you can see in the table, I also have a graph I'm going to show you, but you can see in the table that the gross profit percentage for 2020 was slightly lower than in 2019. And the net income percentage for 2020 was lower than in 2019. In terms of the gross profit percentage, the higher the percentage, the more profit that the company is taking home. Therefore, the higher the number, the better. This table shows that Pfizer was taking in less profit in 2019 than they were in 2020. And I will show you the graph that exemplifies that they were taking in less profit in 2020. You can see that in 2019, it starts higher and then it gradually moves down from the gross margin and the net margin. Solvency ratios are responsible for measuring the ability of a company to pay its long-term liabilities, such as debt and interest on debt. Solvency ratios are measured through debt ratios and interest coverage ratios, which I have attached the formulas for as well. And basically, the debt ratio is the ratio of a company's total liabilities to its total assets, and it's responsible for measuring their ability to pay their debts. The interest coverage ratio is the ratio of income from operations to interest expense, which measures the ability of a business to pay the interest on its debt. So the table shows that the debt ratio in 2020 was less than that of 2019. The debt ratio of 59% means that 59% of the company's assets are financed with liabilities, and the other 41% are financed with stockholders' equity. The decrease in the debt ratio between 2019 and 2020 is a positive trend for Pfizer, since a lower debt ratio means that the company has more assets than debt. The interest coverage ratio also shows Pfizer on a positive trend from 2019 to 2020. The ratio of 7.0 in 2020 means that the company has $7 of operating profit for every $1 of interest expense. The next important set of ratios is the asset management ratios. They are responsible for making business decisions that are indicating how successfully a company is utilizing their assets to generate revenues. The most commonly used ratios within this group are the accounts receivable turnover ratio, the inventory turnover ratio, the fixed asset turnover ratio, the total asset turnover ratio, and the return on assets. I won't go too far into detail on this, but let's just say that there is kind of a skew of numbers here and it is a bit jumbled up, but I did attach a graph that shows basically Pfizer's inventory turnover rate compared to the industry average over a number of years, which is just showing that Pfizer was a lot lower compared to their competitors. So the last set is the market analysis ratios, which determine if the company is generating enough net income to reward the stockholders for the use of their money. So this basically just makes sure that the company can pay their stockholders and their shareholders. And some of these numbers are skewed and they do range a little bit, but it's good to note here that the return on equity measures how much profit a company generates with the money shareholders have invested. So their number for this isn't necessarily bad, but it may raise red flags for investors who want to see profits from their money. So basically that wraps everything up. Just a conclusion of Pfizer. Their pharmaceutical products have a significant impact on both our people and our planet in positive and negative ways. And that presents Pfizer with many opportunities and challenges. But despite any negative impacts, Pfizer has begun to execute sustainability measures, most importantly for the environment, to ensure that they can get people their medications without adversely affecting our marine life and us also. So finally, the financial analysis ratios and the financial statements just summarize that the company had more revenues in 2020 than they did in 2019. However, they were more profitable in 2019 than they were in 2020. And here is my works cited in case anybody would like to see where I got my information from. And I will be open to taking questions. Thank you very much.